Mute, and mute. It was on mute. No wonder. Hold on. Hold on. What's up, everyone? You hear me? Thank you. Things good. Everything's good. So I avoid talking to myself today. Let me tweet this. Send it to your stock. Okay. How's everybody doing? Thank you, Mario. Avgo out, looks kind of flat initial reaction. They're probably waiting on some AI guidance, as you would think. Honestly, flat is up for Avgo, considering the move in this thing. Let me get some of this stuff off of here. Off. Get that off for now. Maybe hangs out in this range, worst case scenario, for a little bit. What else? You had Lulu. This has kind of been a dud for quite a while. Lulu slashes annual sales forecast. What's their weekly look like? And that's it. Any other interesting earnings? I saw a few Kathy names like Pass reported, stuff like that. Up a little bit. Nothing to talk about. Broadcom sees fourth quarter AI semiconductor revenue $6.2 billion, estimate $5.8 billion. That's a big smash. Third quarter semiconductor solutions revenue $9.1 billion versus estimates of $9 billion. What'd I do? I'm not sharing my screen. So why they say they see my screen? Thank you. What would I do without you, Joe? I forgot to do that. I knew I missed a step somewhere. All right, I'm good now. Thanks, buddy. Thank you. I wasn't sharing my screen, guys. See that? Joe saved me a lot of aggravation here. Woo! Can you imagine? You guys would have been like, what the hell is he talking about? All right, so we're good here now. Costco reported net sales. Costco earnings? Oh, no, these must be the every month. What do they call them again? Same store? So you got Costco same store sales that just came out. I got to get this off. Net sales $21 billion for retail August. I don't know what estimates were there or anything. And that's it. All right, we'll get rolling here. Get your coffees ready. I got my coffee somewhere here. Let me just mute a couple things so we don't get disturbed. Yeah, I see it. Thanks, guys. Joe called me up and let me know. So brain's working now. All right. Yeah, I didn't scramble. Usually I scramble between 4 and 4:15 to get some props and charts for you guys, the things we usually look at. But I'm going to try going just off the top of the dome into market update section of the Steam Room and do it that way today. Because we don't have to look at too many things. I think one particular thing that we pay attention to pretty closely in the steam room is kind of the epitome of, I think, the current setup as a whole. Right. So let's dive into it. Okay. First things first. Again, I hate to get too wonky. I don't want to. I'm not the type of person to dissect every daily, weekly move in the market. Yeah, obviously it's futile. Doesn't make any sense to do so. But there are times where the price action does make sense, whether you agree with it or not. In other words, you got to handle an understanding on what's taking place out there. Doesn't mean you're making money off of it, but at least you got an understanding of what's going on. And I think what we've been seeing, if you recall the last couple of webinars, what we've been talking about is because of where we're at in the rally from those April corrective lows, right? From where we're at this point in the rally, based off price action, positioning, and without seeing a correction yet, a cleansing, right? The kind of reset you usually get that allows things to start over or start anew, I should say. When you don't get that rinse, you get into a type of environment, the current backdrop, where you get constant rotation, right? Which can get aggravating at times. Sounds a lot easier to trade than it actually is. And something else we were looking at, remember those correlation indicators we like to look at. When correlation gets extremely low, you get less participation, not necessarily just less participation. It's harder to find stocks that are going to outperform or are going to perform accordingly to the market. So in other words, in simple English, best way to explain it is you get a market that's up, but you're in a stock that's not rallying with the market, right? And that's kind of, when you get into this type of backdrop, to me, that's the main risk. Right? Now, why is that a problem? Is because a lot of times you're sitting in names, okay, that aren't participating in the rally or in the strength in the market, and it's okay while the market's fine and holding up, right, and continues to look bullish. But everything we should look at in the market through a risk-reward point of view, right? That type of environment eats away at the reward. Right, so you're less likely to find success, but you still take on that same risk of sitting with exposure. And if some sort of sell catalyst shows up and tilts the momentum in the other direction, right, that risk side of the equation is still there. Then, right, so you got nothing chewing away at that. It's not like there's less risk. You're still taking the same risk, but less of a reward. So that's kind of the best way to put it in layman's terms, what we're kind of seeing in a lot of the things we follow, right, over the last couple of weeks. And again, not that anybody should take what I'm doing for myself as gospel, but I'm interpreting the things we look at, and you take that information and apply it to however it fits you best. But in this type of environment, what I like to do is kind of cut back on some of that risk. Right, so a lot of stuff that I've been sitting in, because again, when you got an extremely bullish backdrop, when you got that tailwind, when everything you're firing on all cylinders, that's where I like to get sloppy. If at any point in trading, right, or playing this game that I have a tendency to get sloppy, I'd rather do it during that time. Right, you could get away with being sloppy in that environment, but when you get into different environments, that's where I like to kind of pull in the reins a bit, right? Get a lot more selective. Cut some of the fat around, like some of the holdings. We were talking about it the last couple of weeks. I was buying all sorts of things, right? Anything that could sweeper activity, name looked interesting, had a sexy story, just came public, right? Any excuse to buy over the last 3-4 months, we used it as an excuse to take some action and buy. And I think, for me, that's the biggest change right now. That's the biggest change, okay? So at the same time, while we're in that environment, we want to pay attention to some of those indicators of risk because they have a tendency to build up during this stage, right? So while you're in this constant rotation and while you're in a market that still looks bullish, still looks strong, you get some of these warning signals that start to build up a lot of times over a course of time, not all at once. And that can be a nice heads up to getting out of the way of something that could be dangerous if you're heavy on the long side. Okay. So again, in simple English, I'm kind of catching everybody up to date to where where we're at right now, where we've been at the last couple of weeks, the last week or two. Okay. That being said, this rotation that we are seeing can be traded, right? I think the main problem we want to try to prevent is treating rallies the same way we were treating them over the last couple of months, right? So we had a tendency to buy something over the last couple of months, and even though we're always quick to sell, a lot of us in here, especially me, you want to give it some room, right? You want to give it some leash because you see that upside. You got some real estate to the upside. Here in this environment, you kind of want to take a different approach and be more tactical, because what happens is a lot of these names, you start seeing a lot of the same names, the same strong, sexy story names that have been leading. They consolidate or they pull back, catch some flow. And while you could still play for a bounce, you don't want to necessarily hold every single one of them thinking they're all just going to rip to new highs and, take a similar path to what they've taken over the last couple of months. All right. So that's kind of generally how we're looking at things. There's still trades, there's still tactical opportunities out there, but obviously we want to take a more cautious approach here, right? A more selective approach. And that's generally how we see things here. What we've been, and for example, like this week in the market, or let's say since the last webinar, what's been really interesting is you had kind of this back and forth, right? The small caps were outperforming. They outperformed over the course of the last month. And you got kind of tech that has been lagging, right? Big tech specifically, you've had some lagging price action there. Okay. Microsoft, right, quietly has come off the highs. Names like Amazon and stuff like that have been consolidating, have been choppy. What we saw this week is we've seen a rotation back into those names, right? So this back and forth rotation allows these things to come off highs, get a little quiet, and then you see this rotation back in the other direction. And that's kind of what we've seen up until today, where today is kind of on an island of itself. We'll talk a little bit about that. But up until today, this week, we were seeing rotation back into some of those big names that have been quiet and underperforming, right? So you had, and obviously there's, call it coincidence. A lot of times it just happens this way, but you get this catalyst that kind of sets it off. Google had that news, right? When was it? A couple days ago. Google big reaction, Apple big reaction, and then you started to see this outperformance in all these names. I think Apple had a decent week this week, right? Yeah, so names like that, right? So me personally, I don't think this is going away anytime soon, right? It's not going to be every day that we see this type of price action. We're going to get days like today that look healthier in a sense, and a lot of times these days like today are going to come off this. Right? So these quick little rinses, right? You get these quick little rinses, and then you get a day or two of better participation where there's no rotation in a sense. Everything's moving together, right? But then very quickly, what we're likely going to start to see is that shifts back into that rotation we were seeing. And that's usually how this stuff resolves until you get to a point where you have enough there or some catalyst shows up at the right time to kind of tilt the momentum in the other direction. Okay. So that's where we're at, right? And if you guys remember, I'm kind of basing a lot of what I'm doing here on IWM in a sense, because that's right now my biggest position. my main position. I did trim a little bit of it. I think we talked about that, but if not, we'll talk a little more later. But that's something I want to be long of, regardless of whether we have a correction here at some point or not. Okay, big picture wise, I want to have exposure to small caps. I want to hold a decent chunk through that correction, and I want to add if we do see a correction. Okay, but at the same time, I want to take advantage of some decent short-term profits and trim that, like I have here recently. Okay, so that's kind of everything is evolving around IWM, not just because it's my go-to trade and position, but a lot of the pain trade in the market stems from that, as we discussed, right? You have still some decent short money positioned on caught-off sides here in small caps. And if things if the chips fall in a certain way, which the bears, put it this way, if the chips fall the way the bears don't want them to fall, you could get quite the reaction, quite the outperformance out of small caps, right? McElliott, for anybody who follows Charlie McElliott, he touched on it on his note today. Talk about you get a Goldilocks print out of the job number tomorrow, and you can possibly see some serious outperformance out of small cap, right? So that's where, until that short money gets squeezed out there, I think we're okay. In other words, I think that the pullbacks are likely to be shallow, barring some major exogenous event. Okay. That being said, there are things that are starting to build that are concerning me, that once we do get this small cap squeeze kind of out of the way, whenever that time comes, you got some real threats out there. And I think two of the big ones right now, I think, are tied to each other, right? So let's start with this. Vol, okay? Now, it can linger. We've been talking about this. We talked about it today. We've been talking about it over the last 2 weeks. What you got going on here, because of every little pop in VIX being sold, right, alongside with the correlation chart we were looking at last week, what's been building in the background has been a pretty aggressive short position in VIX futures from large speculators, hedge funds. Okay. Now that has a tendency, a lot of times it can continue to build, right? Doesn't mean that has to create problems immediately. But the longer it lingers, right, and the more offsides they become, the bigger the price we're likely going to have to pay via some Volmageddon event, okay, when that tilt comes. Okay, so let me show you what it looks like. I don't know if we looked at it last week. I know on the member webinars we looked at it, but just so you guys get an idea of what it looks like. I don't want you to think I'm pulling shit out of my rear end here. Hold on. Here it is. Let's have a good look at it. Okay, so I don't know. This is from the last week or two, pretty close to being updated, up to date, I should say. Okay, so these are non-commercial. This is non-commercial, so think of the way we like to talk about it, non-Sharpie positioning in VIX futures. Okay, now you can see going into the 2022 bear market, very similar, right? Very similar setup in a sense, where it continued to build, right? Throughout late 2021. A lot of people were ignoring it. The large caps continue to go higher. Nobody cared because you weren't seeing the consequences of it right away. But as you got into 2022, when the calendar flipped, that's when, 2022? What year is this? This is 2022. Oh, September of 2022. So wait. Let me hold on a second. September of 2022. That can't be right. September of 2022. Since 2022. Anyway, you see what's going on here, right? The buildup of it, and then what happens is you get whatever catalyst it may be that gets these players to cover their shorts, people scrambling for insurance and protection, buying VIX because they don't have any exposure there, and you get this rubber band, elastic band effect. Okay. So again, the point I'm making here is similar to this. You can see it continue to build, right? It doesn't mean because we're paying attention to this now that this has to end or this has to crack right now. But this is a risk that's certainly building out there right now in the markets, right? One of the things. Okay. And to that point, if you remember, the other thing that kind of could be a problem here is in relation to this, you have these systematic funds that trade on this type of activity. In other words, as VIX breaks levels to the downside, they add more long exposure in the S&P 500 and they short more VIX. They're getting a little. They've been crowded, right? I mean, especially on the VIX end, they're max stretched as far as being long equities and short VIX as well. Okay, so you got the firepower for, at the least, right now, even a short-term vol type event. Okay, so that's, I think, to me, that's the big risk out there in the market. This chart that I happen to pull up, I think, explains it best, everything that's going on here. The blue is the systematic funds. Okay, these are a lot of these CTAs, vol control funds. You can see they're max long here. They've been max long for a couple of weeks. And they're catching the trend, doing their thing. Everything's beautiful. The discretionary crowd, so more of, right, fund managers and stuff like that, playing off emotion, opinion, all that, they haven't been nowhere near as bullish overall. Again, reason being, a lot has to do with they're short still things like the Russell pretty aggressively. So if you do get an unwind of these shorts, you're going to have both of these facets of positioning offside. And that's where you usually see problems. Again, correction is what I'm referring to as problems. All right. The Sharpies, and I think if you want to look at just one thing to sum everything up, I think Sharpies sum it up best. Sharpies right now, this is not up to date. It's pretty close. This is net exposure in equity index futures, slightly long. Okay, so they're not aggressively long equity index futures, but the bigger takeaway for me is they are not aggressively hedged in a market that's come a long way, and we're starting to see some offside positioning here and there, right? So that's, I think, the best sign of, to me, of the threat of a major drawdown, or kind of, being concerned about too many bulls out there and an end of a trend type thing is not there yet, right? And how could you be when you got an aggressive short position in the Russell like you have right now? A lot of the long heat out there is tied to NASDAQ. It's tied to the NASDAQ. Okay, it's not tied to outside of mega cap NASDAQ names tied to S&P 500 or the Dow or the Russell. Obviously, it's not tied to any of that. Okay, so Sharpies are not hedged. Okay, good sign. But what's interesting is, because of the VIX thing we just looked at, look at what Sharpies have been doing in VIX futures the last few weeks. So Sharpies have been building exposure in VIX futures on the long side. Okay. Again, you usually don't see these two together. Usually what you see is when Sharpies take off hedges, they sell VIX. right? They're always long. Sharpies, more than not, are always have long exposure to VIX futures. Okay, they're commercial hedgers. They hedge. A lot of hedging takes place in VIX and VIX-related products, right? So they're always have some exposure. As you can see on this chart going back to 2018, right? Here's the zero line, and they're rarely short, okay? It's pretty noteworthy when they're short. That's a pretty strong bull signal when they're short, okay? But what they'll do on occasion is when there's offside positioning building in VIX futures, they'll take the other side and start to get aggressively long. And that's what you're seeing them do the last couple of weeks here. Okay. Now, again, it's very similar to what I was showing you earlier. That can linger. You know, this can continue for a few weeks. But as it lingers, right, it usually leads to a substantial pop in volatility. Right? So the risk doesn't go away because you don't see the risk tomorrow or the next day. All right. But I think Sharpie positioning right now, as complicated as what we're looking at, the current backdrop may be to some of you who don't really pay attention to this stuff on a regular basis, I think Sharpie positioning basically is the epitome of what everything is telling us right now. And I think that's the beauty of Sharpies, period. All right. It's just a quick synopsis on whether there's any offside positioning in markets. Okay. So knowing that information, you know, now you know at least what you got on your hands and you plan accordingly, right? What that means may be different to each and every one of you. But what it certainly shouldn't mean is being as aggressively bullish as you were when these all were in the bullish column. Right? That's for sure, for all of us. Okay, that's one guaranteed takeaway from this, undoubtedly. Regardless of what the price action looks like, regardless of what the market looks like on a day-to-day basis, price action-wise. Okay, based off the stuff we look at in the Steam Room each and every day and on these webinars, you cannot be as aggressive as you've been over the past couple of months based off what you're seeing. So that's why I've taken the approach. Okay, again, we're not seeing bunker, as we like to say, bunker type signals flash, right? We're not even seeing major concerning signals, kind of what we saw earlier this year building yet. Okay. Again, if you recall, if you were around then, you know, I was a lot more cautious where I wanted to get in cash rather quickly, basically all cash. I was selling even runners at that point, like little stuff I left behind, I was concerned about. And I didn't want to put on any overnight exposure, right? Right now, it's been, you know, the last couple of weeks, gradually different, right? I want to gradually raise my cash position. And if there's something I like at a decent risk reward spot for a trade, I'm willing to play it. All right? I'm willing to play it as this plays out. Okay? As this plays out. So I'm being cautious, more selective, but at the same time, right, if this does linger and builds, continues to build, if there's some money to be made on the long side, I'm looking to take advantage of it, even though it may be in a more tactical way. Okay, again, that's my actionable approach to what this is telling me here. Okay, it may be different to you guys. All right. But that's kind of where we're at right now. That's kind of where we're at. Okay. We were talking about like stuff like correlation and stuff like that. Right? We're just seeing again a continuation of what we've been talking about. Here's a lot of these correlation indicators. Okay. And don't do that. right? We were talking about how correlation here is low, and what's likely to happen, the highest probability play out when you start getting to these low levels, is not a major correlation spike immediately. Like usually you need some major catalyst to show up for that to happen. Okay. What you usually get is this, right? These interim spikes, 1-2 day spike of correlation, 1-2 day spike of volatility, and a complete unwind of it, right? And the buildup of that ultimately will lead to something like this, which results in a correction and a pretty decent VIX spike. All right? And then, again, the problem is when exactly does it show up, right? But you're not Nostradamus, right? It's not, sometimes you get lucky, it happens to show up immediately after you're prepared for it. Other times it doesn't, right? That's why, in my opinion, I always rather be early than late. I got no problem being early. Again, if you're trading your own account, you should never have a problem being early on the sell side. Okay, but you don't want to leave everything for last minute. Oh, because that's how, right? You get too cute, and that's how you get caught. Okay, but so that's exactly where we're at. Again, I'm just getting you guys all caught up to kind of what we've been talking about the last couple of weeks here. And while this has all been going on, you have outperformance in areas of the market, right? Like we talked about, small caps have outperformed over the past month. You guys are well aware of gold and the gold miners, what they've been doing, This day-to-day rotation, if you try to analyze each and every day, you kind of miss some of the stuff that's going on outperformance-wise, right? Like tech looked great today. NASDAQ looked great. But you look under the hood, right? Tech has been net lagging overall. I just played a little catch-up this week. I would say the one resilient thing about the market that's been incredible has been a lot of these little warning signs that we like to keep an eye out for. Once we start to see them, they resolve rather quickly. We were talking about this today in the steam room. I'll give you an example of one here. Okay. Now, again, eventually it leads to a buildup of like, why do I keep doing this? Sorry. Okay. It leads to a buildup of it, and you got to pay the price. But right now, it's washing them all out. Okay. So let's talk about a couple of them here. Okay. So this is the credit spreads proxy, right? What are credit spreads doing in relation to equities? Equities are rallying. They look strong. Credit spreads, what are they doing? Are they tightening, which is bullish risk on, or are they widening out in the process? Okay. And a lot of times credit spreads will give you a heads up on some deterioration, right, out there that equities may be ignoring. Here's one of them. Okay. Again, one of the main things that we were concerned about going into the start of this year before the tariff correction. Okay. You had credit spreads, right? Here's just, again, the chart overlay so you can see it in relation to the S&P 500. While the S&P 500 is making a new high, credit spreads are not, right? So you got a divergence that build up, believe it or not, from, say, mid-November, right after the election, right where everybody's doing cartwheels all over the place because Trump won and how good it's going to be for Bitcoin and equities and this and that, right? That's where it started to build. And from mid-November, December, all the way through, I mean, the market, the S&P 500 made a high February 19th. And spreads lag significantly, right? Now, why shouldn't I have FOMO throughout all this? Because even though equities have technically made a new high, they haven't done anything spectacular. This is not easy trading. You know, again, correlation levels are extremely low. Everything that you want to see for a smooth trip in a trade is not there anymore. You got to earn your money now. All right. So there's no reason to get FOMO just because the market made a high one day without you significantly involved. But this was a glaring signal here. Glaring, right? Major buildup. You want to see this resolved early. Okay. And what happened? Mid-February, and the market catches up. Okay. Now, what do we have here is something similar, possibly starting up, right? This is what we've been talking about the last couple of weeks. Okay. Credit spreads, again, not in a major way, but have widened out a bit. While, up until today, equities really did nothing. They were just chopping around, but the S&P 500 made a new high today. Okay. So again, this is one thing for sure right now is telling you that it's not full-fledged risk on out there. Just because you saw an update today where more things were involved, it's not full-fledged risk on. Okay. Because while SPX possibly tested the high or made a high, the Qs did not, right? Hello? What happened here? Okay. So the longer these warning signals continue to build, the more worried we should get, the more cautious, I should say, we should get. Okay, because early on, if these divergences, like what happens, what I was getting at is the resiliency of the market. You get kind of a little bit of a divergence, and then the market sells off. Right when you see a divergence starting to build, you get a 2-day sell-off that kind of offsets it in a sense, right? Buy some more time. And the market's done a good job of that. Okay. But again, these are the things, listen, these are the things you may not want to pay attention to. Okay. Two things I will say about that. One, you could become a STEAMROOM member and you have people do that for you and just share the information with you. And I'm not trying to be a salesman here. I'm just saying any outfit that follows it. Or you could ignore it and get caught off guard each and every time, like I used to do early on in my trading career, and want to smash my head into pieces every time. You know what I mean? So the easy way or the hard way, you're going to learn. But these are the things we're keeping a close eye on. Another thing of divergence we'd like to keep a close eye on, as you guys know, I talk about it a lot, VVIX, right? Every time there's a little bit of divergence in regards to VVIX, I don't have an overlay of it. Can I put it on here? There may be too much aggravation. Well, let me try here. Hold on. Every time there you go. You know what? Let me make this easier for you to look at. Is that better? I think that's better. Okay, so like here you had same thing, VVIX starting to diverge. Well, let's look at it here a few times. VVIX starting to diverge. Okay, if equities continued higher, it would lead to possibly even more divergence in VVIX, and that would be even a brighter caution signal in a sense. But boom, you got like a 2-day gap down and then unwind, right? So you did it a couple times here. Instead of the market ignoring it, it's kind of the market resolves rather quickly. All right, but ultimately what you're likely going to see, especially if there's upside in the indexes, Okay. And we'll talk about that in a second, because what my gut, or if you put a gun to my head and like ask me what the biggest risk price action wise possibly could be, we'll look at that in a second. Okay. But again, that's more feely than signal based, right? Because again, that's how do I know what the price action is going to look like? But what you likely see is if the indexes continue to grind higher, there's going to be a period where this is going to push higher with it. And that will be screaming to us to, instead of doing cartwheels and slapping fives over the new highs, to raise cash and be extremely careful. All right? It'll be ignored, because what likely is that you're not going to see a sell-off for it immediately. You're not going to see the market sell off the next day. You probably won't see it sell off for the week. It gets ignored, pushed aside, and then will lead to a nice violent sell. Okay? But before I forget, because I wanted to talk to you guys about this anyhow, this is what I mean. This is what I think could possibly be in store for, I think, more of the NASDAQ. Let me put it that way. I think the risk to the NASDAQ, because again, the Russell certainly can see upside, certainly can outperform. The S&P 500 a little less so, because it has some of that tech exposure in it. But like the equal weight, I think could easily outperform the S&P 500, right? Like RSP. But I think the risk to like that NASDAQ trade for now, and it would be extremely healthy, is something like we're seeing in the DAX. Okay? You guys have seen me post this DAX chart way too many times. Okay? I don't trade the DAX. I don't trade any German stocks. Okay? I got nothing to do with Germany. So if you're wondering why I've been posting this DAX chart a lot over the last month or so, is because of what's been taking place there, action-wise. Okay? Europe has been leading our markets. I think the first time since 2009, you got that the European markets, overseas markets, are leading U.S. markets. First time since 2009 this year. Okay? So pretty big deal. And right out of the gate, as you can see, this was one of the hottest markets in the world, the DAX. It was one of the most underexposed. Everybody was bearish to DAX. They thought the end of the world was coming to Germany, basically. Nobody was long the DAX, okay? So you had quite the reaction. But look at what it's done since June. Look at this. Now, you know how many times I happen to keep tabs on it, and I look at it, and I'm like, all right, it looks like it's good. It looks like a break. It's breaking out. It consolidated, caught its breath for a month. Looks like it's breaking out. And then this happened. Back here, it's breaking out. And then this happened. Right here, it's breaking out. And then this happened. All right. So you literally, 1, 2, 3 straight months of sideways action. Pretty tight range in a major market. It's not a stock, right? Major market. And like right now, okay, with how things set up, positioning-wise, sentiment-wise out there, I can certainly see something like this playing out, right? Wouldn't it make sense? Like, listen, if you remember in early August, we were talking about September seasonality. Now everybody's talking about September seasonality, right? Everybody's talking about how bearish September is. Everybody. Okay? Everybody. So what's likely to happen, right? Again, barring some exogenous event like 9/11, because then obviously you can't do anything. But barring anything like that, you likely don't get much of any weakness because everyone's looking for it. Okay? You get something like this through the month of September, or even net higher. September could be up overall. Not much, but in the green while everyone's looking for red. But you get more of chop, and that kind of screws everybody, especially if you got the Russell outperforming. All right, so if the Russell's up more than the SPX and Qs in September, that's max pain for everybody. So you could certainly see something like this playing out in some of the overheated stuff out there, the overheated stuff. I think for the index, for the bullishness to continue, you need to see the other things involved. All right? But you get something like this, and then more than likely, because again, I don't know if this brings in more bears. I think it wears out bears. And if it wears out bears, then that leads to a correction November, let's say, something like that. But again, no reason to predict it, jump the gun. You deal with the information as it comes in. Okay, but this is really interesting, right? Again, think of the day-to-day price action. Each and every day, people even just assume that DAX has been strong, just like U.S. markets, whatever, hasn't done a damn thing. Dead money the last 3 months. DeAndre Hall, I'll send you the FedEx of envelope and money as soon as we get off the webinar. I promise. Thank you, DeAndre. I appreciate it, DeAndre. So that's the shtick here. Okay, again, not sexy. Not what everybody wants to hear, I'm sure. Everybody wants to get sloppy long or sloppy short, right, and have a party. I get it. But it's a tricky backdrop here. Again, at least for me. At least for me. And I think some of the recent stuff I've been playing, right? And, I'm treading lightly. I'm not buying everything I see like I was at one point. I think I'm a lot more selective. I'm taking it nice and easy while I'm selling stuff that I've been holding. I haven't done much shit. You know what I mean? Like some things go up after I buy them, then they fizzle out. Like right now I bought KSS, something new I played. The problem with what we're seeing, guys, is that, like, here's an example. KSS, they're buying Jan call. Okay, it's pretty decent buying. Not bad. Like, if you like the stock and you were looking for sweeper activity to kind of tip you off, I think it's worthy enough of that. Let's put it that way. But like for me, I don't want to sit in KSS right now. You understand? That's the last thing I want to do is sit in anything besides my TNA and IWM that I'm adjusting. All right? That's the only thing I want to sit in right now. Like ideally, I want to trade. Okay? And you're probably saying, don't you always want to do that? No, not really. I get it. Like a lot of you are traders. Every day you trade something. That's not my approach. Like when my signals are most bullish, I like to buy and kind of chill, right? Like I'm looking for things to buy and chill. I'm not looking to be so active. Like right now, I ideally I want to be more active than I was, but at the same time, I don't want to overtrade it if there's nothing to trade. You understand? I'm not just going to make shit and pull it out of my rear end. So if the sweeper activity is allowing me to be active, I'm going to be active. Okay. What I'm getting at is some of the better looking flow out there is stuff like this. Example, Google. And granted, it caught news the next day. But Google, well, Google is a bad example because they were seeing action around it. But Google, they bombed 2027 leaps. No doubt institutional buying. No, not one doubt about it. Not one doubt about it. Right? Aggressive, massive buying in Google 2027 leaps. Amazon caught like $15 million sweeps in 2027 calls. Okay. A lot of the quality out there has been with time. Now, again, rewind 3-4 months ago, at that entry, that is exactly what we wanted to see, right? Now, for me, it's a different story. But, these names, if you've been trading these names this week, they did exactly what you wanted to do. They move now, right? So that's perfect for if you're trading these names, right? You want to see them move now. So, yeah, case in point, KSS, I bought some KSS. Am I going to treat this like if I bought KSS 3-4 months ago? Probably not, right? If I don't get some movement on the short term here, I'm gone. So that's kind of how I'm looking at things. What would make you sell your TNA? Girl Trader, basically, there's not a lot that would make me sell my TNA, but here's what I would recommend for you, okay? Well, again, it depends what you're in for. If you're in for the reasons that I'm in, you should be locking in some profits. If you're in options, you should roll, no doubt. If you're in TNA and you have, some decent profits, if you're in some size, I would recommend doing what I'm doing and selling some of it and moving into IWM calls with time, or you could even do TNA calls with time if that is a route you rather take. Okay. And the reason I say that is you got to understand TNA is a levered ETF. Okay. It's not structured to buy and just sit in longer term. Okay. These things aren't made for that. So you want to, we want to buy TNA when we think we can get a nice move on a short-term basis, build some cushion, and then adjust that money if we like it longer term and position for that. You understand? Does that make sense? Because what happens is there's going to be a correction. There's going to be a correction, guys. Whether it comes tomorrow, next month, there's going to be a correction. Okay? And if you want to hold anything you have a nice entry in, right, through that correction, these are things you have to think about now. Like TNA is probably going to be really difficult, even with a decent entry that we had, to hold through a correction from here. Here, let me give you a perfect example. Okay? Now, I sold it and I got out of it long before. I wish I still owned it, but a lot of you remember the gold and gold mining setup that I had a nice size position in, right? I had Nugget, JNUG, GLD, and a couple little gold miners, right? Again, this is back last year. Oh, here's the entry. Oh, this is annoying the shit out of me. Here. So, Girl Trader, this will explain it best, right? Here was my entry on Nugget. So think of it as TNA. Okay. Now, here is where I sold the Nugget. Okay. Here's where I sold the Nugget. Now, if I was going to hold this through correction, look what I would have had to hold through, even with this great entry, basically almost give back all of it. All of it. And this is with this cushion here, right? Like, what happens? You don't have that much of a cushion. You can easily go red because it's a levered ETF. And as the selling builds on consecutive days on the downside, it gets magnified. It goes down more than actual gold miners are doing. Same way on the way up, right? That's why I like playing these things when I think I could get a bump initially, and then I can move it into something else, like longer term. Okay? So what I'm saying is, if you want to be in that small cap trade, like me, longer term, you have to think about what you want to do with TNA now. You want to start thinking about it now. You want to have a plan now. Okay? And what would make sense is more than likely IWM calls. You want to, live dangerously, you go TNA calls and sit through it, right? You don't have that because it's the principal risk that you have by holding it. Okay, you want to at least think of your plan. But for me, this trade, similar to the gold miner trade last year, there's nothing really that can get me bearish on the big picture trade in small caps. Because of where it sits right now. It's under-owned. It's heavily shorted, right? We're talking about an extreme max short we're coming off of. Like for those of you who don't know what I'm talking about and haven't been on the webinar or haven't been paying attention. Oh, wait. I put it as R2K. This is what it looks like. Okay. So here's the Russell 2000 hedge fund short position. It's come off the last couple of weeks, but look how aggressively short. Right? We talked about it. Okay. So what could make me turn bearish right now? If the worse the Russell looks, let's say the job number is a disaster tomorrow. A disaster. Small caps will probably take it on the chin tomorrow off a disaster number. Okay? What happens on the positioning side of things? All right? That likely improves. Hedge funds likely add back that short exposure. People become more bearish on the small cap. You understand? So even though it may be short-term bearish, I think big picture-wise, it ends up setting up the same way you set up the first time. What happens if the AI bubble blows up? I think small caps would benefit off that because they'd be coming out of these big, expensive tech names, and it's a perfect excuse to rotate into small caps, which have lagged this whole entire bull market. Similar to 2000. NASDAQ bubble popped and gave birth to one of the strongest bull markets in small and micro cap history. You understand? So for me, I'm not trying to be cocky here. It's just a setup. Like, there's not much that would make me bearish. The price action could be bearish, certainly, but I would want to add to that, not cut into that. Okay? What I'm trying to do now is just be smart about it. Okay? I have a lot of principal risk on the table. Okay? Because again, I'm not in options. I'm in the ETF. Okay? So right now it's a $40 stock, and I got a decent amount of it. All right? So it's tying up a lot of principal that's involved in it, and I got some really nice profits here. So I want to be smart by taking some of that off the table, but still longer term, I want to be in a decent amount. So I'm moving chunks into it as I sell into IWM calls with time. Yeah, and well, I'll tell you this much, Girl Trader. If you get, and McElliott touched on it today. I don't know if you saw that note. Here. Oh, you know what? I got it here. Hold on. If you get a Goldilocks number out of jobs tomorrow, meaning soft, the Fed's going to cut, but it's not, the Fed is late. you could probably set off a really nice continuation in small cap. And that's kind of what McElliot's talking about here. So this is the Russell futures 3 months after the first rate cut. You got a decent green there. 6 months, even more. That's another thing too, right? You're getting a rate cut now, which you weren't getting. So that's another reason to be long small caps. Now I say that, and at the same time, as I say that, you got to understand, another reason to be long the small caps. Nobody's long. They're short. You understand what I'm getting at? It's not like I'm telling you, I like the small caps and everybody's already long. That's like me saying, oh, I like AI. I'm bullish AI. Oh, no, fucking, what good am I? I'm bullish AI. So is the whole fucking world. Right? The whole world positioned bullish in AI. What I'm saying is you are starting to get major excuses to buy small caps, and nobody is long. Nobody. Even the bulls are short small caps. And that's a big problem for them. That's a big problem for them. Okay? So, and again, that's why, as cautious as I can be of seeing some stuff like the VIX being heavily shorted, stuff like that gets me concerned, at the same time, I see things like this that, you really don't have that froth in the market you would think you have at this point. It's concentrated. So while there could be a correction initially with everything, I think you'll see kind of that rotation into the other stuff a lot sooner than you think. Yeah, and that's what we're seeing now, right? That's what we're seeing now. Like this, what we just looked at here. Oh, okay. What we're seeing the last couple of weeks here is them being forced out of that short exposure. You understand? That's what's happening. And they're not getting long. They're just covering shorts. They're not getting long. So until this changes in a major way, big picture wise, I'm bullish. I'm going to be bullish small caps until that changes. All right? And look at like Sharpies. Where's Sharpies? Oh, here's Sharpies. All right? So these are Sharpies. Again, commercial hedgers in the Russell 2000 futures. Okay? You look at overall in equities, they're pretty much neutral, right? They're just not hedged, but they're neutral, slightly long. The small cap is what they are aggressively long for them. This is aggressive long exposure for them in the small cap. All right, kind of similar here in the 22 bear market lows, but this was everything. So they were buying small caps with the NASDAQ, with the S&P 500. Here, this is the only thing they're aggressively long in equities. So all this stuff helps, right? Especially as things, there have been legitimate reasons not to own small caps. Okay, especially when you're battling inflation, higher rates, the Fed tightening. These are all reasons not to own small caps. As those start to flip to the other side, you get the other side of that. Reasons to own small caps. Okay. By the time you see all the bullish reasons why to own small caps, that's not the time to buy it. All right. when everybody is bullish small caps and everybody's long small caps, if anything, that's the time to start trimming and getting out of that trade. So that's the only thing like right now I feel comfortable holding because of that. There's no that positioning on a big scale like that doesn't exist anywhere else. You know, if anything, you got the other side of extreme, like NASDAQ, for example. You got a lot of over-owned pockets of NASDAQ, which I think are a problem. Okay? Not even, I don't think, again, apocalyptic problem, but upside problem. Okay? Like this, right? When this was a problem, this didn't mean that the semis are going to go bankrupt in 6 months. It just means that at the least, you're probably going to deal with something like this. You know, and you're pretty close to that in a lot of NASDAQ areas. Again, you know, so what can certainly happen, and it may be bullish for the indexes, certain indexes more than other at times, you could get this type of digestion, right? Like the DAX in some of the overcrowded stuff and outperformance in things like the Russell. And that would be max pain to everybody. You understand? That would be painful to everyone but us. Painful to everybody, even the bulls, right? Because the bulls are long this. Right now, the bulls, okay? So when you think of like money managers out there, the pros, the bulls are the total opposite of what we're at right now. Okay? They are short small caps and long tech and NASDAQ. I'm talking about the bulls, not the bears. The biggest bulls out there. That's how they're positioned. So that's why it's a big pain trade. Okay? You know, doesn't have to resolve all at once. Sometimes it resolves pretty quickly, and that's where you get that big explosion in price action. We'll certainly take that. That would be fantastic. But more often than not, it resolves over time. It takes time. You know, like this takes time. Look at this. And then by the time this was done, anyway, you ran into correction and look, right? So this is what I'm concerned about with some of the stuff out there in this market. Okay? You could be sitting in it. It feels bullish. It looks bullish on certain days, but the reward is really not there. And then when a correction comes, you're going to get hit over the head anyway. What good is that? No. So that's the story. No, that's the story. And name-wise, action name-wise, let me get everybody caught up. Because again, I don't like to talk about the market as much as I talked about it here. I like to talk about names. But this week, again, big caps have pretty much been the focal point. I've mentioned the Google. I think you guys are pretty much aware of the Google action, but look. What's this one? Oh, that was today. Where's the that's got to be over here. Yeah. So these were those 2027 leaps that they were buying, the 200s. Almost 4,000 of them. They were paying $44 in premium. Okay. And, you know, all sorts of other action around it. Here's what they look like. Look at this. 2.6 million for a 500 contract suite. Definitely institution. But they were buying other shit too. Look, December 190s for 1.2 million. What is that? May 2025, I think that is. And then you got Amazon. That was the other big cap, longer term name. Here's what that looked like. Amazon caught aggressive short dated action today. Oh, here's the Amazon right here. Look. Now these are, believe it or not, Amazon has been a laggard compared to some of the others. You know what I mean? Like this Amazon has been dead money. So they're moving more towards that. This to me was, aside from that action, the leap action, this to me, I think was one of the better looking trades of the week. McDonald's, which has been seeing bull flow even ahead of this. But you had a risk reversal here. Hold on. Oh, August. No. What is this? September. So see, it was seeing some shorter dated flow on McDonald's, and then so this here. November bull risk reversal. They sold the 285 puts to buy the 330 calls. Yeah, I don't know if anyone's going to get excited about McDonald's, but those of you who play this type of name, that was probably the best looking order flow this week. The rest of the stuff, wasn't the rest of the flow wasn't anything to talk about. Oh yeah, open. I mean, you got spec action all day long there. Crazy action in open. But you got literally all of Twitter buying open. So you have spec action like that. But some of the other names, if you recall what we were talking about, like look, and I always go to this name because I just think it trades picture perfect. Look, you got the drawing up there still. Okay. And again, I don't necessarily think Akko breaks down immediately from here, but you certainly can see this chop continue. Oh, come on with this. So if you remember, we did all this drawing here, right? So you get this tradable bounce, right? Holding to new highs and another run like this, you're asking a lot. Possible? Sure. Catches some news, Trump, who knows? But the probability is a lot lower. Right? Like, look what it had to do here after the first run. Maybe you just get some sideways action here. You see now a lot of people get caught in like these type names. Like Rocket Labs is right up there with Hood, with some of the more impressive buying all year, going back to last year. Right? We've talked about that. But you got a $3 stock that's now trading. It was trading 50 for Christ's sake. It's just, man, it's not the same. You know what I mean? Not the same. Especially coming, like you had some digestion here off this run, right? You had a nice setup. I mean, incredible move here. Look at this rip. Now, everyone is looking, all the technicians, especially the newer traders, right? All they're looking at is this now, that you got like a bull flag here. That's what they're looking at. Not taking into account the stock ran from 3 to 50 already. You understand? A $3 stock goes to 8 and you got a bull flag. That's one thing. A $3 stock that goes to 50 and you got a bull flag. I mean, Now, again, what we've been talking about is if you see some sweeper activity and you like it for that pop, right? That quick pop. That's one thing. I think that's what we should be looking for in this type of environment. But I mean, you saw it. There are people who not only didn't buy that or bought it, they were buying this little consolidation looking for highs. And they got hosed here. Well, option players got hosed, But it wouldn't surprise me. Like Rocket Labs trades in this chop for a while. I think even if it breaks to new highs, you probably see it reverse rather quickly because of how much it's up. That's just my opinion, because of how extended it is. Another one's this ASDS, right? Very similar. Here, you got a couple times you get that quick pop. If that's all you're looking for, that's great. But you're holding it for another run like this, it's not going to be easy. It's just not going to be easy. Again, this was a $2 stock. It went to 60. Like, what do you want? 60 to 90 now? Possible? Yeah. Not very likely. Especially when you are doing a $1 million in revenue. Yeah. So, like, look at this lengthy disaster here. Look, I mean, that's a long time. You're in options, you're dead. That's like the stock going to zero. Right? So, like, personally, I think where you want to look at names like this, if you're looking at the consolidation, you want to look at it after it's been consolidating for a lengthy period of time. Nobody has an interest in it. Nobody's talking about it anymore. And then you see some sweeper activity get aggressive. Right? And you still could be early, but that's when you want to start looking at it. Okay? For momentum players, you want to look at it within here. Right? And take advantage of that momentum. Now here, personally, this is really difficult for me. Like, I'm not afraid to admit it. You got to have some skills to be trading that. I don't have those skills. Yeah, exactly, Sahil. These stocks, you never know where they end up. I'm not saying this thing topped out forever, but, after a move from 20 to 60, there's a high probability of at the least some consolidation, if not a correction. That's all I'm saying. ASDS could be a $500 number next year, for all I know. I have no idea. I'm not making that claim. I have no clue. So, we have a lot of names like this. Again, it's not a disaster, but it's a tougher trade. Here's a name like I kind of like that I traded a couple times, but I just don't have it in me to buy it anymore because it's just so difficult to trade now. Well, now you got a pullback here. So now, if anything, you probably look at it for a bounce. But, this thing, it continues to look good, but you're late, right? Like, here was the initial buying the second time at 4, right? Then there's more buying at 5, at 6, goes to 9, pulls back to 6, more flow, breaks out, goes to 12. At some point, there's going to be something like this. And the flow doesn't have the edge that it had. Here, when ASPI went through a correction and is dead and nobody's paying attention, and trust me, nobody was paying attention to ASPI, it caught some decent action with time. If you like the name, that's where you're looking. I get it. It's a lot tougher there, but, that's where you can make the argument risk-reward wise. Here, for me, these are just trades up here, and you got to be really nimble. You got to be really nimble. And even that spec land, the larger names, you got a lot. It's just tougher sledding, guys. It's tougher. These names are just tougher to own right now. All of them. Here's another one. Is this enough consolidation for VST? After it doubled, it just doubled again, more than doubled. Like here, how long? 1, 2, 3 months roughly off the initial run when nobody owned it or knew about it. Then you had another run here, and then you had a correction from 180 down to 90, cut in half. And now it goes from 90 to 210. And from 210, it's down to 200. And I got to buy it immediately, thinking it's going to go 500. You know? I don't know. Maybe it's just the way I look at it. It's not, whether it happens or not is irrelevant. Like that's a lot of risk there. That's a lot of risk. MSTR, I think, is done. I think MSTR is done. I think this stock is done as a stock as you know it. Done. Yeah, I just don't. It's not an equity anymore. Google Wealth, when you get a chance, go on Google or YouTube and type in MSTR income strategies. You won't believe what comes up. You won't believe the amount of shit that comes up. The amount of hedging in MSTR is, words can't even do it justice. Now I think it works both ways. I think it can help buffer the downside too, right? Because MSTR, I don't know about you, but what scared the shit out of me in this name is that it could go to 400 and go to 100 in the blink of an eye. Nothing stopped it. I think the hedging that's involved now will buffer the downside as well. Unless, Bitcoin just blows up. But it just, I don't, I don't think you want to be fooling with this name. Again, there are other names that are doing what MSTR started to do, right? And you had some nice pops and they kind of unwound, but that's where the momentum was, like kind of these things. But, this stuff scares the living shit out of me. I'm not going to lie to you. But you're talking to a guy who honestly is, I guess, anti-Bitcoin, you could say. I did not think Bitcoin was still going to be around. But then again, if you were to tell me we wouldn't have a recession either, I would have thought you're nuts. So I'd like to see where all these things are if we ever run into a recession one time. But just a disclosure, I'm not the biggest crypto guy, NFT, Solana, whatever the fuck they call these things. But these things have a lot of risk. Have a lot of risk. But at the right spots, you got, these things can move. So I think you're better off looking for the opportunities in these things than in MSTR personally for spec trades. Yeah, this is somewhat interesting to me. What's it? Oh, Duolingo here. This is interesting. Oh, yeah, it's a $270 stock, down from $600. But I think if you ever had an interest in Duolingo, I think you have your opportunity. Okay? It wasn't a guarantee that you were going to get an opportunity or sweeper activity. So, and here's why. Oh, wait, why does it not go to, oh, here. That's not it. I'm too far back. Oh, here it is. Okay. So they bought June 2026, 350 calls. Okay. For $50, $51. Now, I don't know. How do you play this thing? That's my question. You're going to buy and inject that type of premium? Again, if you we're looking for an opportunity in this name, I think that's how I want to phrase this, because So you got this thing. The last time it caught action, any similar to this action, was here. Now it looked a lot different then. Oh, again with this fucking line. Excuse my French. Let me erase this. Come on, you little bastard. There we go. So here was Duolingo then. Okay. So you had kind of this big move and a correction, 250 to 150, and then a pretty meaningful bounce, and they swept it up here. And then they swept it up here again. Okay. And it led to this. Okay. Now, you got a correction here, and you got some meaningful flow. Like it's legitimate action. 750 grand there. And what they buy? I think 300, 500. So probably $3.5 million. With a lot of time. I think the only way you could play this is you buy some, you put in what you're willing to lose premium wise, and tuck it in the oven. Leave it alone. You lose the money in premium, you lose it. It's a loser. But you get lucky and you get some AI blow-off rally early next year. Who knows, right? Because the other thing, too, is this is a profitable company. This is not nuclear zero revenue names. You know what I mean? This is a real business. It's expensive, obviously, right? Less expensive, under 300, but they got crazy growth. This is not make-believe. It's real money. You understand? So there's some fundamentals there. Luke? Yeah. Earnings and crazy growth. Crazy growth. Crazy growth. So maybe somebody buys them out. Who knows with these things? I think if you think the AI bubble has room, this is some more like something you probably want to look at. You can't, in my opinion, you can't size up and take a shot. You could, but it's a lot of risk, right? That's why, for me, I don't know how I would play this. That's the only way I would play it, is buy some, risk the premium, and see if you could get a little lucky, right? Risk reward wise. It's definitely worth a shot. What else? We're not in Kansas anymore. Exactly. We're not in Kansas. RBRK, this thing's still in consolidation, but looks okay. Looks good. Here, and this is the point, right? This conversation we're having. This is the point. Like you hear off the IPO, really nice move. Could it have continued? Well, yes, it certainly could have, but no likelihood it was going to run into something like this. It did. It lasted 4 months, 3 months, broke out again, another crazy rip, and now you're in digestion again. You're in digestion again. So, and I own it. A few of us own it from a lot cheaper and are holding it. I'm holding it. But if you're asking now, is it worth maybe taking a peek to bust out of this consolidation? Yeah, it's worth taking a peek. It's worth it. But again, you don't know how long this can last. That's the problem. If you catch some sweeper activity, maybe it tilts the odds in your favor. 30 to 100 is a big move. But it wouldn't shock me you see this at new highs at some point. Gold and silver is interesting. More so gold. And I was really bullish gold. I don't know. I'm nervous about gold. I'm nervous about gold here. And I know that's not consensus, but here's what I think you would be nervous about gold. If the Fed starts cutting rates, the economy starts to show some growth, you lose some of the concern out there. You know what I mean? Like all these confidence numbers that are in the toilet, they start to improve, right? The macro backdrop becomes more enticing. I think gold loses some of its luster, especially after a move like this. Now, I understand. Nobody come at me. I know everybody and their mother disagrees with that. But personally, I think there's that risk in gold here. I think there's that risk in gold. But I'll tell you, this was impressive. This right here was pretty impressive. Was pretty impressive. But gold can unravel fast, man. It can unravel fast. Like I remember, what year was that? Was that pre-2008? When was the gold? When everybody I grew up from Brooklyn was selling gold coins. Where was that? Here. Oh no, 2012. How come I remember it earlier? There was one. No, it had to be this. Yeah. So you know what I mean? Like everything looks beautiful and bullish until it doesn't. But see here, you know me. No matter what, I can't get excited and bullish up here. I can't. I just can't do it. I think the time to get excited about, like, think about what went on and nobody was. You remember the conversations we were having, Sahil? Like, you had a legit long-term cup and handle in gold, and I'm no technician. You guys know that. But it was even, like, obvious to me, who's not a technician, and, like, nobody even cared. Like, nobody even cared. They were so disgruntled. Because of this. This wore out every bull that you could imagine. Every bull off this run, they wore out right here. But now look, like I think you're buying gold here, right? Somewhere in this vicinity right now. That's where you're buying gold. All right? Could go higher next week, next month, next couple months. If that's what you're talking about, good luck, but bigger picture wise, this is just the opposite of what I'm looking for. Bigger picture wise is the opposite of what I'm looking for. We're hoping TNA, well, we won't be in TNA if that happens, but we're hoping small caps look like this, All right? That's what we want. Yeah, I don't see. I'm with you. I don't know, brother. I don't know. It's tough. But you know what I mean? Like small caps, right? Like you look at gold there, right? Where it started. This is kind of like where small caps are at. All right, right now. So, you want to try to find these things early in the cycle, even doesn't mean they're going to work out. But again, on a risk reward, look at things. That's where you want to. What do you want to you want to be looking in that pile. You want to be looking in that pile. What else? Anybody else names ISRG? I heard tariff related shit, right? ISRG. Damn. I didn't know tariffs affect these guys as much. ISRG. Again with this line. Yeah, this thing got beat up here. But if you see decent looking sweeper activity, we've seen sweeper activity in this thing It's not regularly, but they show up. I haven't paid as much attention to some of the more recent because, like, this is where I remember a lot of us. I remember a conversation with Ranchero vividly when it caught this action here, coming out of this. You had a major breakout there. So now, some consolidation here would be totally normal, no? When you scroll back and look at it. But again, not a bad spot. Sweeper show up, Max. Regional banks, yeah. See, they're looking good now. The regional banks are looking good. Yeah, on a day-to-day basis, you're watching paint dry in these regional banks, but they look good. Which one? BE is in the Russell? BE, what a beast. Yeah, Max here, bottom of the range here, right? The holds those lows, not a bad spot. Not a bad spot. And again, I don't know the details of the tariff. I know it was tariff here. Falls tariff impact looms in 2026. What else, guys? What are the financials look fine? They look good. They've looked good. How many times we've been talking about the financials for a long time now? Citi. Again, I don't know the reason why Citi catches the most action of them all, but that's been the best flow out of all the major banks. But you got big moves here. Again, they're not crowded, so they're not crowded ownership wise. They just come a long way. They've come a long way. This one was one of the better actions again today. Schwab. I think are you guys still in the Schwab? I know on this webinar, a few of you were in the name multiple times. Anybody still in Schwab from back when you guys owned it earlier this year? But, again, has looked bullish and still looks bullish. We were talking about these names today. It's nothing. There's nothing better than the growth, right? Those growthier names, and a lot of them are tech related. But you guys know what I mean. When you catch a breakout, you catch a really smooth trip. I feel like with these type of names, you gotta deal with a lot of agita. Like even when they're bullish, right? Like look at Schwab. It was bullish as all hell. The flow remained bullish. Okay. And look at this. Now, granted, coming off this move, that's pretty impressive, right? But even as it started lifting out of this, look at this. That'll wear you out. And then it does that, and you want to kill somebody. They're tough. They're tough. You gotta be willing to hold these things. You gotta try to buy them off weakness and be patient. But of course, a nice flow again today. Some of the regional banks have been seeing more buying. HBAN, one of them, that's breaking out. Huntington Bank shares. IBM. I want to take a peek at OI changes tomorrow morning just to confirm, Sahil. They looked okay, but I'm not 100% sure. But not a bad spot for it. On the IBM. Let me see. Let me pull it up. I think they were November calls. Let's see. IBM. What is this in chronological order? Here it is. I mean, good looking bet. If it sticks. November 285. Yeah. Yep. So that's interesting. What else? What are they? Snap to buy us on? That's a tough one. That's a tough one. I say this, but I try day trading it, and I curse myself out every time I do so. But um, this is a tough one, Snap. You know, I think honestly, you need buyout news. You need takeover chatter. That's what you need in Snap. Vincent's talking about XHB. Good call. That's an interesting spot. The homies. Very interesting. If you remember, we were talking about these for a couple of weeks ago. All right. So you had this crazy rip, led the whole market coming out of 2022, and then really didn't participate much coming off, well, at any point this year. And now with rate cuts back in the picture, building the right side of this chart. And, you know, a few of them, DHI has had some flow. That looks like its eyes are on new highs there. One of these named report, I think Toll or Lennar reports. And they all look good. I think Lennar reports. But these names, you know, some of them are lagging and you got more real estate to highs. But like names like this look like you're going to get a test of highs any day now. A DHI has probably had the best flow of the bunch. I think there was a bull risk reversal there a couple of weeks ago. Oh, reported? What's that doing? That hasn't been doing much. Had a big move and then came back and been choppy, right? Up, looks like it's up off earnings. Been quiet. Software name. Lyft, there's some buying in Lyft. Let me show you. There was actually an interesting leap sweep that caught my eye. Hold on. Here he is. Lyft deep in the money December 2027 call. That was earlier this week. Oh, not the worst look here. You know, you kind of got that possible breaking out of this shit here. And then you got the gap here, right, to get into. That's up higher than 22. I mean, honestly, it's not the worst idea in the world here. You could possibly see some rotation. But that was the order. If you saw me posting on Twitter, this was it. Longer-term bull bet. What's it say? So many areas extended now. Computer hardware. Yeah. And that's why I think this rotation trade is kind of where it's at. You know? A lot of the hot stuff. Again, they're already started digesting. They've been digesting a lot of these things. They've already started digesting. You know, we talked about even the bigger names. Look at Microsoft, right? Quietly. You had this, again, just crazy move. And, you know, for a good 2 straight weeks, it's come off the highs. So it makes sense. It hangs around here. Like, look how long it hung around. Like, you had quite a few false breakouts here, too. Again, guys, that's what I'm trying to say. I'm not saying these things fall apart. You understand? It's tougher trading. It's just difficult. You know, like, look at this. This is not bearish, right? Microsoft. I mean, if anything, it's really bullish after a move like that. But, you know, if you're playing for continuation here, especially in options, you're dead. You're dead. And now you get this crazy melt up. I think you got to start looking elsewhere, no matter what it does from here. But yeah, to your point, I agree. Yeah, these China names, I think they continue to buy dips in. You're asking if momentum is done. These things are tricky momentum wise. I think I think the playbook for these type of names is to try to buy them off pullbacks if you can. And you're going to get pullback. You know, it's not going to be as easy to pull the trigger, but you're going to get pullback. You know, it's kind of an easier said than done type thing. But I mean, from what I see right now, flow wise and all that, I think these things continue to do well. You know, China's always tricky. China's tricky. Any other names here that I missed? Let me see. Hertz, Sahil's talking about. Let's see. Yeah, Hertz had some longer term buying too. Yeah, I don't know. Any sexy story here in Hertz? Ackman, right? But maybe you get some rotation. GitLab, you mentioned GitLab had earnings yesterday, didn't it? Software name? Yeah, just copy messy. How are some of the others, Sahil? Same shit. You know what I saw, Sahil? A net had a pop today again. Look at this thing. Still looking good in that. Like that other one. What's that name that reported yesterday? That's a great growth name. What's the symbol again? CRDO, right? CRDO. Oh, yeah. Look at that. This is a little too extended for my blood, though, now. So you had a little bit of a dippity-do here, and then a run up into earnings. Number one, really? I didn't even know that. Interesting. CRDO. Yeah, see, you wouldn't think small cap now because it's $135, but cap wise. FNMA. That's Fannie Mae, right? Oh my God. Wow. Quite the move. Trump is trying to sell them or something, raise money somewhere. And that's it. Yeah, Bitcoin's kind of been acting sluggish. You know. Oh, and by the way, liquidity still looks like just some consolidation, but you know, if you get the Fed to cut rates, maybe you get a bump in them too. I don't know how it works, but still just showing some consolidation ahead. What's this one? Freddie Mac? FMCC? That's Freddie Mac, right? Yeah. Wow. Wow. Isn't Ackman in these things? I think Ackman's in this. Fannie Mae or Freddie Mac. Snapback work, BTC over now. Yeah, I you know, again, it's nothing dramatic here. Could just be your normal consolidation. It's done it. But again, we talked about this, right? Like Bitcoin, when you talk about the risk appetite, the speculative appetite, you got some sharp money trading in Bitcoin. You know, so Bitcoin doing this is probably an early sign that, you know, some of that risk appetite we've been seeing is dying down. Yeah, I don't see heal because it's there's other forms of liquidity in it. I think M2, I don't know what that's based off. Money, velocity of money changing hands in the economy. So I don't know the exact makeup of it. But I agree. I would think with you, right? The Fed because financial conditions are still loose. I think they haven't tightened up. Well, again, that's looking forward. So maybe something's going to tighten a little bit through the fall here. GEV, that's the GE. Let's see. Yeah. So this is another hot big guy, right? That could digest here for a bit. You got a lot of names like this. See, now, without the market rolling over, even rotation, this shouldn't go like, you know what I mean? This shouldn't roll over, obviously. So you're going to get more of this, kind of like this, right? You had this here. But the charts, they never do it justice. It's always a lot more difficult than it looks on the chart, trading this. But you got something very similar going on here. Because you're coming off a big rip here. Big. I don't think these things, again, without a market, a legit market correction, I don't think these things roll over. I just think you kind of get more of this. Yeah, there was some flow there today, ETN. That's been digesting for a while that came in, right? Well, pretty soon. You're right. Very similar. Yep. Yeah, right. So you can't see this thing bouncing to 365, 370, and it means nothing in the grand scheme of things. So, right, you might have a trade there if you're looking for it. Yeah, these are great companies too. They're just, they've had big runs. Look at the numbers on these things. Oh, that's another one that's had a great run. This United Rentals. Woo, woo. Are you in it, John? Damn. It's just a stud, this stock. Honestly, I have no idea, John. More to go. I have no clue. I have no idea, but certainly looks good. Not sure when to stop. What do you mean zebra? Zebra Technologies, the stock? Oh. Oh, I think you were talking about another stock. Yeah. I mean, I don't know. Honestly, I'm not gonna lie to you and tell you. I know this is very impressive. Very impressive. I don't want to talk you out of any trade that keeps going. This thing's a monster when it gets hot. Wow, such a great stock. JCI, yeah, somebody else was telling me about that. Johnson Controls, they like. I mean, it looks great, JCI. It's not like this thing's been a laggard. Okay, guys, all these things look great. They've moved. None of these names haven't moved yet. Right? They've all moved. Can they continue? I mean, if you're in them, you want to make the argument you don't want to sell them. I'm not talking you out of that. I'm definitely not going to try to talk you out of that. What I'm saying is new risk up here is not the wisest. That's all I'm saying. But these companies are real companies. These are great stocks. These aren't speculative names. Like as you guys know, like United Rentals, I think in any correction, if you like playing this name, like anytime you get a market correction, like it's one of the first names institutions look to buy out of a correction. United Rentals. You're talking about pure breed stud, right? Quality, market has corrected. You want to start putting on some quality names. URI is in that bucket. It's in that bucket. I guess. I mean, I would like Tesla to get going here, Sahil. Nothing crazy. Just get back to the top of the range. But it looks fine, Tesla. It doesn't look bearish. Honestly, if it gets stuck in chop here, I don't think even you longer term would mind that, But it looks fine. It's not like this thing is up and has gone parabolic. It's kind of a laggard. Maybe you're right. You might be right. Yeah. I'm very superstitious. I don't like everybody talking about names I'm in. I'm too superstitious like that. But yeah, I mean, ideally, I would like it to quiet down, just let people talk about it. And that's where I kind of get interested in these names. But yeah, it looks fine, right? Barring a market correction. Again, I think it trades in here. It trades in here a bit because you got kind of a tug of war going on. But how's their numbers hanging in there? Well, you never know with Tesla too, because they got new shit coming, right? They got the robo taxis, and it's not just a car thing anymore. It seems like you got an event every couple of weeks in Tesla. Yeah, I mean that's kind of the issue. It's I don't know. It's just again, it's too involved. Too many hands involved. So I feel like I don't feel have much of an edge. That's what I'm getting at. Okay, you guys remember I talked about it a million times, but the reason I bought Tesla, the TSLL, is because there was a sweep that caught my eye at a decent spot, right? Risk reward wise, that's all. But these names, I'm not a big fan of playing these names, holding on to these names longer term, unless they're really out of favor. That's the only time. Like when it gets too one-sided, negativity wise, which can end up happening in Tesla, may happen again. Like this is what I'm talking about, right? Like at this point, like I remember this is like when Sahil bought it. At this point here, nobody was bullish Tesla. I know that's hard to believe, but nobody. It was literally the favorite line, and you guys laugh. We'll laugh because you see it all the time. It's on my do not trade list, right? That's when you see that, that's your early cue to start looking the long side if you have an interest. It's on my do not trade list. I think now in Tesla, what you have is different. You got a tug of war here. You got the bulls who like it, think it's set up, pent up demand, ready to explode, blah, blah, blah. And then you got bears more tied to fundamentals and all that, politics and everything else. You got kind of the tug of war action going on. But here, you had no bulls left, you had nothing in Tesla. It disgusted everyone. Yeah, I don't think you're obviously not there yet. Maybe you get there, but you're not there yet. If we get there and we see some decent looking Tesla action, I don't mind buying it and hanging on to it. I have no problem with that. I just there's enough bulls to annoy me here, to take away the edge. I just think it's a tug of war right now. But again, where the action came in, like here's where the action came in on Tesla. Like spot wise, there's not that bad, right? Again, I still got a decent profit in it. I'm up like $2 on that TSLO, roughly. Right? Where TSLO close? Yeah, exactly $2. Exactly $2. I'm up. What I was looking for was this. It goes to show you, right? Like target prices and all that. We pull it out of our asses. But what I wanted to see was kind of a test of this high here. So I wanted this to get up to here and test this high. And that's kind of where I was going to sell it. So that's like 360 plus. It got to 350 something, right? And it still could get there. I mean, it's still doing the same shit. Like I think because of the tug of war action, you're not getting that clean cut breakout. So you got like break, retest, push higher, retest. You understand? You're getting more of that tug of war type action. So it still looks fine. So, but you guys know this is not my niche anyhow. I'm not playing the Nvidias of the world and Teslas of the world. Where I make my money is stocks from anywhere from $1 to $30, and nobody's talking about them, and they're catching aggressive sweeper buying at a nice spot. That's my bread and butter. That's my bread and butter. Name wise, FMCI was a beauty. That was a beauty. This is a bad example of what can happen anyhow after that because they cook the books, but you know what I mean? They cook the books. ONDS to buy just another, again, tons of actions, tons of flow, started from under $1, under $1. And now it's $6. You understand? It's still seeing flow, a lot of it rolling, but like the stock went from $1 to $6. Tobias, if I tell you to buy something that went from $1 to $6, and now I'm telling you to buy it at $6, you should shut the webinar off and lose my number. You shouldn't want to hear from me ever again. You understand? How am I any sort of asset to you in any way? How am I providing any sort of edge? If I'm telling you to buy a stock that went from $1 to $6, and now I'm telling you at $6 to buy it. You understand? That's a lot of the issue with these names. Yeah, if you're in from $1 or $2, you don't want to sell it. I don't blame you, but I can't tell anybody with a straight conscience to buy the stock at $6. Because I think the real money, especially playing off sweeper activity, is made here. Not up here when everybody is seeing all that action and everybody's buying it. Here. When nobody's involved, but sweepers are tipping you off. That's where the edge is. Like, that's what the information you want me to share with you. Not at $6. Yeah. And Tobias, that's the problem I think that a lot of us are facing right now. Right? A lot of these names we bought and sold, and they're even higher than where we sold. So what do? You buy them now higher than where you sold them? You should have held it if that's the case. That's exactly the problem here. Right? Well, ideally, you want to find the next ONDS. Now, if you're having trouble finding the next ONDS, that's the market telling you to chill out, right? That's the market speaking to you, telling you, listen, relax. There's not that type of that risk appetite out there. The opportunities aren't out there right now. Tough acting tonight. This is a tough acting tenactin type market, Hank. I mean, come on. This is a tough acting tenactin type of market right now. Yeah, Sahil Park. I mean, I'm going to end it on that because Sahil, you bring up a great point. Quantum. Okay. Did they go bankrupt? No. Did they fall out of bed? Did they, no. They had crazy moves, right? Crazy moves. And this is normal digestion in a lot of these names, right? Some of the others broke out later on, right? And have done better, like a QBTS and stuff like that. But Rigetti was kind of the leader of them. And there's nothing bearish about this. But, just tough acting action here, Hank. It's not easy money here anymore. They're trades now in here, right? You get a pullback, decent spot, some aggressive sweeper activity comes in, you like the spot, you get in, you catch a rip the next day, you get paid, you move on, right? That's kind of the approach we want to take now with a lot of these things. But you know how many people you remember we had the conversation. You know how many people got destroyed trying to buy this initial pullback here, thinking that it's just going to go like that again, and instead does this not even go down, just basically sideways, and buries everybody. And remember the hype, the hype behind quantum. It's gone. It goes away. It doesn't take much. Like it was a frenzy there. Another one's that what's the other one, Sahil? The bigger one that you guys had a nice hit in. I think Horizon in the room had a really nice hit. It was one of the first ones we've seen sweeper activity in. Before IONQ, I remember. Yep. Huh? Like, look, this still looks good, IONQ. It still looks good. This actually still looks good. Wow. This is better than I thought. Up at $40. Unbelievable. Unbelievable. This was kind of the leader of the bunch, even before Rigetti. Rigetti was, I remember, the speculative play. IONQ was like, if you want to put it as the quality of the bunch. Yeah, they look decent. They look decent. But they've had now these lengthy consolidations. They've been consolidating for a long time. Yeah. Crazy. Crazy moves. Crazy moves. And like to Sahil's point, you own an IONQ at $10, $8, $9, whatever it is, and you want to ride through this if you're bullish longer term, who can blame you? Why not? No one has a problem with that. But, buying up at 40 over here to sit through all this, that's a different story. I mean, the stock, you bought it in the 40s up here. The stock went down to what? 16, 17 bucks, more than chopped in half. You wouldn't be sitting through that. I'll tell you that much. The spots on these things, they matter a lot when you want to give them a leash. All right, my friends, I'll let you guys go. I chewed your ear off long enough. All right, so tomorrow, big morning, the job number. yeah, knowing this market to be a complete non-event, but we'll see. A lot of eyeballs on it. You get a Goldilocks type number, meaning a little softness, but not too soft where they're worried about the Fed being too late and the economy, the job market cracking. Small caps should behave nicely. They should behave nicely. But if we get a big miss, we get a big crack in the job market, you probably get some violent selling. I wouldn't be shocked they buy that eventually. You know, I wouldn't be shocked because, again, it's just one number. But you probably get initial reaction. You get some decent selling. All right. And then that's it. The weekend's here again. Short week. All right. But we got some action early in the morning with the jobs, and we'll take it from there. Yeah. Hank, everybody. Always a pleasure, guys. STEAMROOM members, I'll see you mañana bright and early. Everybody else, have a good Friday weekend, and I'll talk to you guys next week. Later, everybody.